Well, we've seen a lot of excited investors, whether it's that GameStop story we were just talking about or the world of Bitcoin, where cryptocurrencies have been all the rage. But of course, as an investor, you have to think about the tax ramifications of your buying and selling, and we are getting into tax season in this country. For more on what you need to know if you have been thinking about investing in crypto, we're joined by Jamie Golombek. He's Managing Director of Tax and Estate Planning at CIBC Wealth Advisory Service. Jamie, always nice to have you with us. This is, I imagine, a question that people are going to have to start to think about. And if they're not thinking about it, at some point, either an accountant or maybe the tax folks are going to bring it up with Canadians. What do we know at this point about how we treat the tax realities of, say, investing in Bitcoin?
Well, we certainly know that it's taxable. And even though the money is all secret and encrypted and hidden in these vaults and things like that, the CRA wants to know about it. They're very clear. They've had announcements on their website and publications and media on this for the last 4 years already. So for sure, your gains or your income are going to be taxable. The question is how.
So let's dig a little deeper into that. I think a lot of our audience is very familiar with capital gains tax when you're obviously making moves in your stock portfolio. Is this parallel to that? Is the Bitcoin trading and capital gains from Bitcoin very similar to what happens with your stock portfolio?
It really depends. So it might be. So certainly if someone's investing in Bitcoin, they have sort of a one investment, they sell it a few months later or a year later, whenever, I would agree. I think that would be a capital treatment, 50% taxable. And if you've got a loss, it's a capital loss that could only be used against other gains. That being said, because of the speculative nature of Bitcoin, there are many people that are actually engaging in Bitcoin trading akin to day trading. And that's where you get into this sort of gray area, a little bit more questionable in terms of whether or not it's still a capital gains treatment or effectively, are you running a business? CRA has 5 factors that they've looked at traditionally when it comes to a trading and securities business in terms of things like the frequency of transactions, how often you're trading, how long you hold the stuff. So there is a risk that if you are very, very active in the trading of Bitcoin, that could be considered to be income, meaning that the income and the gains are fully taxable. But it also means that if you have a loss, you can use the loss against all other sources of income, unlike a capital loss.
So that's some helpful context for people to think about, and just the way they think about a lot of issues with their taxes. You've got a few tips for people to consider if you're trying to make sure you're organized and ready for the tax man. Jamie, why don't you walk us through some of the Bitcoin tax-related issues that might be helped with a few planning tips?
Yeah, so the most important thing, of course, is to keep good records and receipts. So in other words, when you're transferring cash over to buy this particular Bitcoin, you want to keep a record of that. Make sure you keep those records for at least 6 years after the end of the tax year, like you would with all tax records. In addition, you want to also note the foreign exchange rate, or I guess the Bitcoin exchange rate that you're using. Just like with any other foreign currency or commodity in this case, effectively you want to use the exchange rate on the day that you buy the Bitcoin. And then, of course, when you sell the Bitcoin, you want to take that particular exchange rate, and then you use that to compute the capital gain or the income. And the most important thing is to be consistent from year to year. So in other words, if you are taking the position that these are capital gains, only 50% taxable, and then a year later, you have a loss and you say, oh, well, maybe this is a business loss, I want to write it off, you really should be consistent between your tax treatment from one tax year to the next.
And we know from 1 year to the next, the rules around taxation can be tweaked. They can change. Since this is such a new area, would you anticipate this is going to be something that evolves over time?
Well, it certainly may. I mean, as the government starts to look at, the proliferation of Bitcoin, we're now seeing, of course, ETFs, which are easily tracked and easily reportable because those are traded on an exchange, right? So it'd be easier if people start investing via the ETF route. Certainly possible for the CRA to get sort of better handle on those dispositions. But the Bitcoin itself, and you're investing in the actual currencies, of course, that's all sort of relatively hidden. It's really up to the taxpayer to come forth on their tax return and properly report those gains or losses.
And I just want to, before I move on, I just wanted to circle back. You talked about the day trader mentality. Certainly, we've seen a lot of retail investors moving in and out of stocks in recent months. And so I guess going back to your first point about what kind of investor you are, even outside of Bitcoin, just if you're in and out of some of these, high-flying stocks we've been covering here on BNN Bloomberg, same process applies. You got to sort of think about all of those factors.
Well, absolutely. These are the classic factors that CRA has been out for years in terms of their determination of whether someone is an active trader in securities, whether it's a day trader or, not literally the same day, but it could be, frequently trading the same stock for very short periods of time. This is a main source of income for you. Maybe you're in the business because you're in the securities business. These are all factors that CRA would look at in terms of the time you spend on this transaction to try to determine whether or not, in fact, this is income from a business, the business of trading, or this is just like an investing like you and me that are buying and are hopefully incurring capital gains.
So this is all helpful, Jamie, and we're thinking about taxes. It's also RRSP season. And then on top of that, things have been so complicated by COVID, people thinking about the different benefits, the realities of what they've been living through over the last year. All these stories merge together. You've been talking a little bit about a theme worth highlighting here. What's been top of mind for you?
Well, of course, all kinds of things are new for the 2020 tax return, certainly writing off your home office, as I've been working in. But I mean, the big one, of course, is all the COVID-related benefits, things like the CERB or the recovery benefit, on which either no tax has been withheld at all or only 10% taxes withheld, which means that many people might actually owe taxes when they file their return. That's why we have this special opportunity coming until Monday, March the 1st, the RRSP deadline, to the effect that you can afford to make an RRSP contribution and deduct that on your 2020 return. Not only, of course, could you perhaps reduce the amount of COVID-related benefits and therefore not have to pay tax. In addition, if you're subject to the recovery benefit, there's essentially a clawback over $38,000. So if you can get your income to below the $38,000, you'll actually save 50 cents on the dollar by being able to preserve the counter recovery benefit. So these are some of the tips that we're thinking about as we approach the RRSP deadline on Monday.
What are you hearing among some of the Canadians that you're trying to navigate through this? Is it something that people have been thinking a lot about?
Yeah, we're getting lots of questions every single day and really panicking about how much tax they're going to owe on all these COVID-related benefits. And certainly there was a whole issue of whether they qualified based on gross income and net income. I think that's been more or less taken care of a couple of weeks ago with a favorable announcement from the government. But I think the issue is this year's tax return will be complicated, and many more people will actually have to get some help, whether it's online or whether it's by visiting a tax preparer virtually. There's lots of great methods, lots of great information online. But certainly for many of us that have been working from home, the first time in our life that we're claiming work from home expenses, that could add an additional wrinkle to this year's tax filing.
Well, it's always great to get your insight, Jamie. Thanks very much for shedding some light on all of these issues. I know a lot of people are thinking about them right now. That's Jamie Golombek, Managing Director of Tax and Estate Planning with CIBC Wealth Advisory Service.